I'm back on and I'm live, and I see myself on the software. The question is, can anyone actually hear me? So if you can't hear me this time, then I'm going to call it a day and hand this off to some interns to work on. Alright, so officially, wow, that's a late start, and we missed a lot. Looking at the market right now, we actually started to roll over, and hopefully some people are actually short. I can tell you right now that this dealing with this broadcasting technology is about 100 times more frustrating to me than actually trading. So for those of you out there who trade and get frustrated while you're trading, to me trading is like going to the beach, relaxing, having fun. Dealing with this audio and broadcast stuff is mind-boggling. But looking at the market from the pre-market today, we had the big gap up. The theme that we've been talking about recently is... Oh good, audio's good. Great. Thanks everyone for telling me I'm live. Thanks for all the Twitter messages. And again, it probably sucks to tune into a show. I know if I tuned into a show and it wasn't working properly, I'd want to pull my hair out. So I understand your frustration. Just take your frustration, magnify it times 10, and that's the level of frustration that I have dealing with this stuff. So looking at the market and the pre-market, the theme has been recently pre-market trends are following through on the open. And we had a nice gap up this morning, and we had a couple of attempts at holding this 114.80 in the market. In the pre-market we took it out, and the market became a short, at least for a gap fill to where we had resistance on Friday, and we spiked up there one time right on the open to 114.80 and failed, and actually went all the way down to 113. There was a small pop back up, and then there was an attempt to make a new low which failed, which I think probably started to get some people long. If not above 113.80, they probably got long there. And then we topped out at 115. You don't want to fight this. When the market's trending back up this, you don't really know where it's going to fail. 114.5, 115, maybe the pre-market high. But once it failed at the whole number here, let me zoom in on today's action for you. Once we failed at the whole number right here, and then made an attempt at a new high and failed again and started to hold below, I thought this was a great spot for some people to get short. And I'm guessing there are some people still short the market or market stocks. I saw some people shorting the city, which actually that hasn't come off. FCX, wow, that got above its 33 resistance from the last few days. So it looks like the cleanest thing has actually been the SPYs themselves in terms of when they failed here at 115. And now the question is going to be, are we going to ride this all the way back down to this 113.80, or even breach that and go all the way to the lows of the day? If we end up trading all the way down to 113 again, that's pretty phenomenal. That'll be about a 10, 11 point move intraday in the SPYs between the up and down action, which is, and what we look for in these types of markets is we look not only to trade the SPYs, but the other market ETFs like TNAs. You can see TNA chart looks almost exactly the same as the SPY. This is a leveraged small cap. Another one is the FAZ, which is one of the leveraged, it's the inverse leverage financials. And so you can see when the market double bottomed, the FAZ double topped here, and is actually turning back up with the market coming off. Just remember, have to kind of invert your thinking when you're trading this one. This used to be one that I traded quite often. You can see it's been very liquid today and trading in fairly tight ranges before breaking. The stock that I traded on the open, and I do not trade commodities generally in the metals, but when you start having moves like we saw back here, when we topped out in the 40s down to 30, we're having similar types of moves and gaps. This attaches my attention. If a stock is going to do this type of volume, I feel like I can control my risk fairly easy in it. And this is what we were looking at this morning. And the trades this morning were really, there was a double bottom in the pre-market, and we came back up to this resistance area that we set in the pre-market around 28.40, failed there, but when we took out that pre-market resistance and the morning high, it was a great trade on the long side there. So again, this is, pay attention to technicals. I mean, obviously in this type of market we're trading momentum, but we're also trading off of these technical setups, and there's just a lot of these market players who they're looking at these ranges and saying, hey, if we break out of this range, I'm going to get aggressive. And so you look at the SLV, you notice that it's setting up in this point range or so here in the pre-market, and then after the open, if it breaks out of that range, whether it be to the downside or the upside, you have to take that trade. You have to take it because in a stock like this, your risk is 10-15 cents at most. And if you keep on taking those trades, in this case, when it broke to the upside, got up to about a point or so. And so just catching this one trade makes up for all the other trades that maybe were scratches, small losses, small winners. So keep on looking for these really good technical setups. In that case there. And I think what I'm going to do right now is go right to the setups that were discussed. There were 3 of them at traderview.com that were shared with us, and I actually before the show spent some time reviewing them, and I'm going to just pull those up right now. And 3 people shared trades. One of them was Armo Trader, who's someone who is actually a big contributor to the trading community, writes a blog, tweets all the time, good in-play stuff on StockTwits, and you can tell he's working on his trading game every day. The one bigger point I want to make before I get into the actual individual trades to review, and there were some good ones that were shared, was this idea that very few people actually put in the work in terms of reviewing their work each day, planning out their trades, and you know, it's one of the factors. Look, trading as a living is a performance-based profession, so most people aren't going to be successful at it. But one of the biggest factors that, outside of psychology, that I see is you just get very few people like Armo and the other people who submitted their trades to me, which is people just don't work on their game. They like the action, they like being involved in the movement, they like looking for the setups, but they don't do the post-trade analysis. They don't upload their work into a program like our Chop Tracker or TraderView, which these guys put their work into, and they just don't spend the time doing it. And so the people just don't get as good a results as their potential. And so whenever I see somebody reviewing their work every day, breaking it down, blogging about their trades, I know that person, instead of having a 5 or 10% chance of success as a trader, they move their chance up to at least 50-50. And you know, that's a huge increase in terms of giving yourself a chance to be successful. So for those of you watching right now, if you're not spending the time, at least an hour each day after the close, reviewing your work and kind of doing the analysis of how you could have traded your setups better, it's not going to happen for you. So why don't we get into the trades? And the first one I want to take a look at was shared by Grovander. It was a trade in each TZ, which I thought was a pretty good trade. And here it is. And if you go to actually traderview.com and you look under the shared SMB review, you can actually see these trades that were shared. And I actually really like this one. This one was from actually Thursday. And if we zoom in on the action, his trade was really a tape and kind of a technical trade. It had been in a downtrend that day. He was having trouble at the 9 price. And he identified there was a seller there on the tape. So I think it was actually at 9:01 he identified the seller. There was a held offer at 9:01 for 30 minutes, placed his limit order at 9:01 and got filled. I put a stop at 9:03, so you can see if we zoom in on it, the seller lifted, he had a tight stop here, got stopped out, the seller came back, he reestablished. So one of my favorite things actually about this, and this is something we teach and preach, and I'm wondering if he actually reads our blog and follows this, is you put these trades on, you might get stopped out, but if the condition reoccur, the original thing was there was a seller at 9:01. That's what got him into the trade. He lifted, so he got out. His reason for being in then came back, reoccurred. The seller came back, and he established again. He gave it a second try. My general rule is, if I really like a setup, I'll actually maybe even give it 3 tries. But certainly, it's worth giving a second try. And he did do that, and he caught this down move. So a couple of his questions. His first question was, prior to the trade entry, was this a trade worth taking? I thought so. I thought the stock was trending lower. It's a liquid stock. I thought there was enough liquidity there that if you wanted to put on a decent amount of size, you could have. And I thought it was definitely a trade worth taking. Initial stop. Could he have given his initial stop some more room? I don't think so. Your reason for being in this trade was there was a seller there, and the seller is gone, so you should get out. The seller came back, and you know it wasn't purely a technical. You said it was a tape play, and if your reason on the tape is gone, you should have your stop there. That makes perfect sense to me. And then the third question was on the trailing stop. I tried to give some room for my exit high above the 5-minute bar, but were there any other signs or levels that indicated to get out earlier? I thought that was a perfectly reasonable. And this is how he established his stop. He used this 5-minute, had the hard down move. The high here on the 5-minute was at 885. So if this high got taken out, he decided to cover. And then I guess if you zoomed in on the tick chart in this case, maybe had a nice downtrend. And is this? Yeah, okay, so here looking at the tick chart, I would say to Grove that maybe it's trending down. On the tick chart, it came back up to 78 cents. If you wanted to keep it a little bit tighter, then maybe right here on the ticks it came down, held a little bit lower, a little bit higher at 868. So maybe you would have stopped out here at 78 cents and saved yourself 9 cents on that. You can make the argument you were making a trade based on the tape. And so maybe you want to get a little bit closer in terms of your time frame on your stop. But overall, I thought it was a pretty good idea. I thought the way you executed it was a really nice job as well. Okay, I want to go to the next one, and this is Armo. And Armo, the thing is, whenever I look at Armo's trades, he's definitely adopted quite a bit of the stuff that we teach in terms of how we evaluate stocks in play, pre-market price action. So whenever I review his stuff, it's really like kind of looking at some of my own stuff, but just with a lot less experience. I think Armo's been, how long have you been trading Armo? For a couple of years? He's definitely worked on his game a lot and pretty advanced for somebody who's only traded for a couple of years. So he was trading RHAT, RHT was in play, they reported earnings. Initial reaction was positive. The next day was kind of a neutral. He basically summed it up. It was about neutral in the pre-market because basically the next morning he came in and it hadn't taken out the prior after-hours high, and then had actually started ticking down in the pre-market. So it was starting to establish that kind of that pre-market downtrend. He was using 42 as his inflection, and he basically shorted at 98 cents. So pre-market positive reaction next morning. Neutral right here, then starts to tick down, so he's starting to get a little bit negative. I like that thought process. You can see that it actually did follow through on the downside right on the open for him and came off 1.5 points. I think his biggest issues for him generally are, does he have enough size and is he holding it long enough? His question was, how do I man up and just pull the trigger to get full size at the level? I often worry the seller is going to lift and then I'm going to get stuck covering 20 cents higher, negating the great risk reward. I think in your case, I think Armo, I don't really think right on the open that you necessarily do want to man up and get huge size, because we know right on the open it is about momentum. I would be more interested probably later in the morning if I saw it fail above 42 and start to hold, get a nice consolidation over here, having more size. Right on the open, to me it's a momentum trade. I do a little bit below 42 and then maybe takes out 41.80, I will add to it on some momentum. So I'm not really gung-ho about really loading the boat right here. The second thing is, how do I decide where my stop is if I'm shorting in the 42s? Do I cover if it lifts? More complex stop, half. Generally my rule is, if I'm shorting right there at 42, I do half. Whatever I consider a decent move, maybe above it lifts or maybe above 5 cents, and then the rest probably rest above 10 cents. I want to protect, and remember it is gapping up, so I do want to protect against this idea that maybe it could go up to the pre-market high. Now in this case, on that day, the SPYs were actually really weak and we were gapping down, so I thought the risk was a little bit lower, even though it was fresh news. I thought that you kind of had the market on your side with the big gap down, and we were right at this 114 level, which seemed to have been holding at the time. Your next question is, how can I work on being more patient to not worry about covering on the first drop rather than covering if it's a better area, like versus what signs a buyer? Good question. Armo, I think the general rule that I like to follow there to be more patient is just make sure you hold a portion of your position until the stock proves to you that you're wrong. So in this case here, let's say you shorted, 400 shares up at 42, and hold 100 out of that 400 until something different happens. In this case, something different to me would be on the 1 minute, 3 green candles here. Maybe it gets above this area right here. What gets me out of that last lot? I think pops back up here, consolidates, comes down, doesn't make a new low, and then gets above $41. That gets me out of my last lot and probably gets you to flip and actually trade it on the long side. So just remember, a small piece of your position, usually about 20 to 30% is what I will do. and you start somewhere. Start with 100 shares, but make sure you hold that 100 shares until something drastically changes in the stock. In this case, there's two ways to define that. Someone might define that as a hard up move. Another minute, these three up bars here. For me, I would actually probably zoom out to a 3 or even a 5 minute and say, hey, to me the change is pop back up pretty strongly to 41, didn't make a new low, made a higher low, and then boom, took out the 41. That to me is a change. That to me gets me out of my last lot. And that's that. And we had one more trade which I wanted to take a look at for you guys. And this was an MGM. And so what we want to do is look at the 10 days on this. One second. Okay, so MGM had been moving lower. How does this look like on the 1 month? Okay, so let me see if I get this right here. You had it from the 13th to the 15th. It was getting tighter. Let me just do a 30-minute on that for you. Okay, so here it is. So this is the setup that Apex Trader was looking at. He noticed that it basically was getting very tight. So here it is. Here's your range. I don't know how he was viewing it, from 1040 to 1080. So his thinking was that it was getting ready to break out of this range. He was looking for a swing long, and then I'm probably guessing he's using his target up here at this 1150 area. And he makes the trade on the 16th above 75 cents, and I guess so what he's doing here is he's actually using 75 as his trigger here. To me, I can definitely understand what you're saying here. On the 15th, it couldn't get above the 75 level, and that's going to, get your interest. And actually, I'm working on a blog on Netflix, which I haven't published yet. And so and this kind of explains my thinking pretty clearly. It's very similar in MGM, just a stock that's stocks can trade the same technically. This one's obviously 1/15th or 1/13th the price of Netflix, but the same technical ideas apply, which is you have this 1075, but then you have the real confirmation of a breakout is going to be above this. What actually is here, and it's the prior high on the 14th. So let me zoom in on it there for you. So on the 14th, the high was 1081. Basically, my thinking is when it gets above 1075, the high of the 15th, that catches my attention. If it spends time consolidating above 75 cents, I can understand getting involved on an intraday basis. But until it closes above this high here of 21 cents, I'm not taking it on a swing basis. So that's one thing, John, that I would have done differently. And again, my focus has not been on swing trading for many years, so I'm a little bit rusty. But if I were gonna be taking this on a swing basis, it would have to close above. It would have to have a close outside of this range. So I noticed that you got long, and it didn't close. And we're looking at the 16th, and let's look at the last print here at 4 o'clock. Closed. Let's see when did it close here on that day. So on the 16th, it closed right here, not above $10.80. So for me, that actually I couldn't take that out as a swing position. I would, on the following Monday, and you had the weekend also. On the following Monday, it actually did close above that 1080, and this is the day that would have gotten me actually into the swing. And then you were rewarded the next day, gapped up, and then failed at around the prior high, around 11.5, and he actually gets out. He holds it. He sells actually some in front of that 10 and 11.5 level, and the following day he gets out. He stops himself out. I guess he was using a stop right here. And this had been afternoon support, I guess, on Friday. So that part I totally agree with. I agree with where you got out here on the first day. I agree where you stopped yourself out on the second day. But establishing that swing long before it had to close above the resistance from the multi-day range doesn't really quite sit right with me. I think at this point I'm going to wrap it for the day. I'm sorry I didn't get a chance to get to questions or to the radar. I'm going to have an intern set this stuff up in advance before we start this from now on. I apologize to everybody who had to wait. Let me know if the audio and the video was synced up. Please send me a message on Twitter, and we'll get this right. But I really like the idea that we're doing this on our own page now. We have flexibility on time, so we can do special shows, and you know, that's really it for today. Looking at the market, I'm just going to call it a wrap. It's been a long show. Anyway, thanks for submitting those trades, and I thought those were some really good examples by the guys who participated. I appreciate everyone participating, and I think a lot of the people watching today probably learned a lot. And if you want to see their actual trades and their charts, go to traderview.com, and that's where you can find them.